Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Tom in the TaxQuips forum who's gotten some bad advice. He says, I started investing in an online program that's registered in the British Virgin Islands. They say this program is exempt from the U.S. Securities Act of 1933, the U.S. Securities Exchange Act of 1934, and the U.S. Investment Company Act of 1940, and all other rules, regulations, and amendments thereof. We're not FDIC insured. We're not a licensed bank or security firm. My question is, do I have to pay U.S. taxes on the profits I make on my investments with them? And if so, how do I do that? They don't provide any tax forms. Well, Tom, I'm very glad that you're asking this now at the beginning of your investment project. Of course you must pay taxes on your earnings. As a U.S. resident or citizen, you're taxed on your worldwide income, regardless of what promoters tell you. And it's disturbing that they would even sell it with the idea that you won't have to pay taxes. And it's even more disturbing that they say the investment is exempt from any laws or insurance that might protect you. Personally, I'd pull my money out when people put something like this together. I had a client who got involved in something like this many years ago, and I begged him to take it out fast. He didn't. And at first, he doubled his money in no time and doubled it again. I advised him to pull it out while he was ahead. He didn't. The third time, of course, he lost it all. It was a Ponzi scheme, as it had to be with those kinds of returns and no protection for the investor. Unfortunately, in the meantime, he persuaded other friends to buy in, and he was even more devastated by their losses. It's going to happen to you, so be careful. Anyway, how do you report this? Well, the first thing you do is report the foreign account on the Treasury Form 90.22-1. That lets the U.S. Treasury know you have an overseas account and how much is in it. There are no fees associated with this report. However, the penalties for not filing it can be as high as 100% of the account balance. So beware. Report the account. The second thing, there's no need for anyone to issue tax forms. Those are only designed as tattletales, so IRS also knows what you've earned. It's your responsibility to keep track of your earnings and to pay taxes on them. No doubt they give you online access to your account to generate reports about your gains and losses, and if they don't, you're even more at risk of being defrauded. You print out that report and include the information on your tax returns. If you get dividends, you'll report them on Schedule B, but you won't be able to take advantage of the special qualified dividend rates, since undoubtedly those companies are not traded on the U.S. Stock Exchange. You'll report your capital gains on Schedule D. It's actually pretty simple, but I urge you to be cautious. I'd hate to see you lose your money. And remember, you can find answers to all kinds of questions about offshore investing and other tax issues free. Where else? At TaxMama.com.